Hey, folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Wednesday, May 3rd, 2017. Well, folks, take a look at Apple. Barely down on earnings, but again, iPhone sales were a little bit weaker than the market expected, and that freaked people out just a little bit. The stock was down about $3 lower than it currently is when it was at the lows. Now, today's action on Apple, what's going on here? Well, basically what the thought process is very simple. You have a new iPhone, the iPhone 8 coming out in the not-too-distant future, and analysts are basically saying we're going to blame the slow iPhone sales on the fact that people are just waiting for the new iPhone to debut. Which, listen, it could be true, but that's a big gamble. But again, I think that's why the stock is not down more on the day. You have a little bit of minor profit taking today, but for the most part, things are opening up here and moving back towards the flat line. Now, I will say this. There's something about even numbers that attracts stocks, and Apple has not gotten to the 150 even number just yet. It's still basically a few dollars below. So my bet is you see Apple trade up to about 150 and change, and then you'll start looking at a very potential big top. My guess is it's going to be a sell the news thing. Once Apple debuts their new product, you'll probably see them move up into that above that 150 level, and then that's where the top will be put in. And then the next earnings where, we get the numbers, that's going to be the big one. That's going to be where, that's the one where Apple could drop 10% if iPhone sales are not good at that point. I mean, it could be just a massive debacle. So we'll have to see, guys. We'll have to see exactly what happens. But one thing is for sure, you are seeing Facebook, who reports earnings today after the close, dropping just a little bit because, listen, going into the earnings of Apple, everything was on a bull run because of Google/Alphabet earnings as well as Amazon earnings. So everyone was just overly joyous, right? Everyone was so happy. Everyone was thinking that Apple was going to do great. The fact that Apple stalled out a little bit put a little pause in people's minds, and that's why you're seeing Facebook profit-taking ahead of earnings today, just down a little bit. And Facebook is up so much. I mean, just since the start of the year, and I keep on telling our members this is amazing, we were below 115 at the beginning of the year. So 115 to 153.5 today. That is an amazing move, folks. You're talking about almost a $40 move, basically 35% move in the stock since January 1st. That's almost unparalleled for such a mega-sized company to do. So the bottom line is investors are being somewhat on the smart side. Listen, Facebook could go up a little bit. I don't think there's much upside, but could it go up $2 to $3? Sure, it could. But investors, in my opinion, are being smart here to take off the table some of the gains here. Because, again, you have such a massive gain in the stock. If they don't come out with blockbuster earnings here, the stock does have some decent downside. You can't blame it on not debuting the next iPhone like Apple can. So weak numbers could definitely hurt it, and I think smart investors are doing that. And listen, I'll be the first to admit, in this bull market, this stock could go a little bit higher. Although, again, I want to make it clear, I don't believe it will go very much higher. I think upside max is about $2 to $3, maybe $4 on the stock, while downside is $10 or more if they disappoint. So I think the risk-reward is definitely more towards the short side, but it doesn't mean that that's the way it's going to go. I just think if it does sell, it's going to go down more, versus if it goes up, it's just going to go up a few dollars. Another stock that reports after the bell today is Tesla, guys, and Tesla's doing the same thing. The stock, again, is kind of defying the odds on Wall Street in terms of it just never goes down. Well, it is going down the last couple days, including today, and we are seeing it coming in beautifully here. Now, this makes it a little tougher on earnings because the earnings, when it was trading at $325 up here, well, then obviously I would have said it was going to sell off. But now that it's trading down about $15, it's a little bit trickier. I would still favor the downside, but one thing about this stock, and this is very important, and this is why I am currently not short the stock at all, nor long, by the way, not long or short this stock. But the one thing you have to kind of tip your cap to is that Elon Musk has this power about him where, the market gives him multiple passes. And that is very clearly shown by the PE ratio on Tesla. I mean, Tesla is trading ridiculous valuations. Even to a growth tech stock, it's ridiculous valuations. It's kind of like the Amazon of the car world, if you will, in terms of valuation. But nonetheless, just like investors give Jeff Bezos a pass, they're giving Elon Musk a pass. So even if the earnings aren't that bad, unless they're really bad, it's hard to imagine this stock sells off more than $10 or so. Maybe 15, maybe gets back below 300 a little bit. But again, earnings would have to be really bad for it to have a bigger sell-off than that. And again, there is a small chance that even if the earnings are just, decent, let's say they just meet or beat earnings by a little bit, it's possible the euphoria over the stock market and over Elon Musk sends this stock a little bit higher. Now, one stock I am holding in it, and listen, let's be honest, it's a very small position. It's a small cap play, but I do have a little position in FIT going into earnings, just because it's a lotto play. It's basically a trade where I say, listen, if it drops, what's it going to drop? 10%, which is 57 cents. All right, so it goes down to $5 or 5.20 or so. But if it beats, and it has a little bit of a bullish pattern here, it has like $2, $1 to $2 upside. So, there's a lot of reward here for the risk taking. And again, the key is position size. And I stress this to our members here at InTheMoneyStocks.com that you have to monitor share size. Like, you don't put all your account in an FIT. If you do that, you're an idiot, frankly. What you do is you basically look at a small cap and you say, okay, well, it's triple the risk of a large cap. Therefore, you need to moderate that risk by buying a third the size. So, for instance, in general, what we tell our research center members is that you don't want to go over 10% of your portfolio in any large cap play. 10% should be your max in the trade. All right, it could be 8%, it could be 7%, but don't go over 10%. So with small caps, we divide that by 3 and basically say you should never put more than 3% of your account in any small cap. And that's really how I'm viewing FIT. So, even if FIT loses 10%, you're losing such a minor amount of your account that it's not a big deal. But on the other hand, if it goes up 20, 25%, I get a great gain out of it. And again, this is a lot about, the video today is a lot about risk reward and analyzing that. And what you've seen me say is that, for instance, even if Apple goes up, Facebook goes up, there's only $3, $4 upside. So it's only, what is that? 1, 2, it's like 2%, 2 and change percent, right? And if it goes down, I think it has $10 downside. So even if it's a 50-50, like 50% chance it goes up or down, you'd still take the bet to the downside because you're risking 2% or 2.5% to the upside, but you could get, 7%, maybe 10% to the downside. You see what I'm saying there? Kind of the same thing with FIT, where, there's a risk that it goes down 10% on earnings, but keep in mind, if it goes up, I think there's 20% or more upside because there's so many shorts stuck in it. So again, even though, in my opinion, this is probably a coin flip on earnings for FIT, a coin flip, right? So it could go up big or it could go down. But because you can make double or more on the upside, it sways me to have a very small position. I stress that small position on the long side. All right, I hope this has been educational, guys. If you want the real live trades that we're taking as we take them, timestamps, entry prices, stops, and targets, come join us at InTheMoneyStocks.com. 7-day free trial. There's a 7-day free trial. You want to take the Research Center for swing trades. And again, 7-day free trial to the Research Center at InTheMoneyStocks.com.